Invite our guest on the show now. We have Gautam Baid joining us of Complete Circle, Stellar Wealth, PMS, to take some questions in the markets where things could really be headed. Gautam, thanks a lot for joining us. Always a pleasure speaking to you. Before I get to the overall market, any thoughts on Z and, how you see this playing out now?
Hi, Pavitra. Thank you for having me on your show. Well, Z Entertainment stock price was primarily being held up because of the expectation that the merger with Sony will go through. Now that the deal has been cancelled formally, I think a lot of institutional shareholders are heading for the exit in droves, and that explains why the stock is hitting continuous lower circuits today. And I think the stock price will probably settle up far more lower because in the short run, because of this intense selling pressure by institutions, and there'll be quite a big sharp fall in the share price even from here.
So what, according to you, is the fair value for Z Entertainment X of the merger-related up move that we have? It's already down to 180, 190 rupees. What's the fair value?
Just a standard disclosure, we do not hold this stock in our PMS, so we haven't done detailed work on the valuation for Z, but just purely looking at the screen and the amount of sellers who are in line to sell this stock, I think from a short-term technical point of view, there'll be quite a bit more downside left here.
Okay. Gautam, let's get to, some of the stock recommendations, which I believe you hold in your portfolio or you've recommended it to your PMS, clients. One of them is Cello World. It listed, I think, in November. This is a company which makes plastic furniture. They've got Cello stationery also. So it's a very, known brand, good marketing distribution. It listed at around 648. That's the issue price. Since then, it's done well. And I think currently the stock is quoting at 864. So good 200 rupee upside from the issue price. Why do you like it? And what's the kind of upside that you see in Cello World?
Well, Reema, in our PMS, we actually like those companies which have got a proven track record of execution and scaling up their operations. And Cello World has got a proven track record of successfully diversifying into multiple consumer-facing categories like consumer wear, plastic molded furniture, and writing instruments. And they have again demonstrated the capability to enter into a new segment and scale it up successfully. They entered the glassware and opalware category in 2017. And in FY23, this new segment was 280 crores in revenue. So this company is able to enter into new categories and scale them up pretty well. And as India's per capita income keeps going up, and as the branded market for plastic molded furniture, writing instruments, and consumer wear grows at a faster rate than the unorganized market, Cello World, with its extensive distribution reach, is poised to be a very big beneficiary. We should also note that among its peers, Cello World enjoys the best revenue growth. The management has guided for 18 to 20% revenue growth over the next 3 to 5 years. Cello World also enjoys the best margins, EBITDA margins of nearly 25%. And Cello World also enjoys the best return ratios among its peers, with ROCE of more than 40%. Also, in an act of very good corporate governance, the promoters, after listing, announced that they will perpetually forego royalty payments to their privately held entity for use of the brand Cello. And this also demonstrates very good corporate governance. So we are very positive on this from a long-term perspective.
Sure. Very quickly, what are the valuations versus peers? And you also said the company's revenue, margins and return ratio is higher than peers. Can you give us a peer comparison on that front and even on the valuation front?
So most of the listed peers of Cello World are basically exhibiting revenue growth in the last 3 years of around 15%, and their guidance is also for around 15% growth. But their return on capital employed is also far lower. So in its broader universe among peers, Cello World's ROCE of 40% is way above the average of all the other listed peers, which is less than 20%. So even though the valuations are comparable, but the return ratios, revenue growth profile are far superior. And I think that is what will lead to valuation re-rating even from here. The stock currently trades at 48 times on FY25 basis. And I think as long as these margins and return ratios remains very healthy, these valuations should sustain.
Okay, should sustain at 48 times. Gautam, the other stock I want to talk to you about is MCX. That is one that you're positive on as well. I mean, of course, the way that it controls the market share is one huge positive. But take us through how you see it from here, because this is also a stock which has doubled in 1 year, right? And do you think for someone who's not gotten in yet, right now would still make sense to get into the stock?
Well, Pavitra, the current market cap of 16,000 crores, and as per our internal estimates of net profits for MCX for FY25, which is expected to be around between 480 and 500 crores, the stock is trading at a 1 year forward P multiple of less than 33 times. And I think for a dominant exchange player like MCX, these valuations look pretty justified. I'll give you some rationale behind our investment thesis in MCX. So trading volume liquidity and the resultant network effect are the biggest moat for any exchange, because institutional and professional brokers need large volume. So that is why they do not ship to any other exchange, even if the competition offers contracts at a lower premium. And this is why MCX has got such a dominant position in India's commodity derivatives exchange market. So it has 95.5% market share. NCDX has got 4.3% market share, and BSE and NSE, who started operations in October 2018, both of them combined hold only 0.2% market share. Just goes to show the strong network effect that MCX enjoys. And excluding agriculture, in bullion, energy, and base metals, MCX enjoys 100% market share in commodity futures trading. And in options, again, it has got 100% market share. And one more important point here to note is that under its previous agreement with its technology vendor 63 Moons, MCX used to pay 10.3% of transaction revenue as the technology expense. But as per the agreement with its new vendor, TCS, MCX has moved on to a fixed cost model. And this will lead to very high operating leverage with the introduction of new products like shorter duration contracts and steel TMT bar futures and so forth. So I think the long linear growth in earnings here is what is going to lead to valuation re-rating for MCX.
Do you want to, give us the disclosure, Gautam, on Cello and MCX?
Yes, we own and hold both the stocks in our PMS, and we have recommended the stock to our clients. And I also hold the stock in my personal name and for my clients in Stella Wealth Partners India Fund as well.
Thank you very much for joining in. Pleasure speaking with you always. Get into a break. On the other side, we'll be joined by the management of Karur Vysya Bank to discuss the bank's Q3 numbers.